Hello, welcome to Wanderer Financial. Today I just wanted to show you an option trade I'm making, kind of walk you through it real quickly. I'm going to try to do a number of these videos in the coming days, so I'm just going to kind of go through my thought process. I'll do it fairly quickly, give you the numbers, kind of what runs through my head with the trade, and hopefully if I do a few of these, you'll kind of start to get the feel for what I'm looking at. So here we go. This morning I actually already made a trade in Work, Slack Technologies. I shorted the stock this morning using puts. You can see the trend has clearly been down ever since the IPO. The 50-day and the 20-day are both moving lower, and it got a fresh sell signal today. What I like about this is we had a nice downtrend. It gave a pop, gave a buy signal, but the buy signal came with the moving averages still falling. What we look for when that's happening is for a quick reversal, and that's what we got. So this morning it broke down below the 20-day, gave us a nice sell signal, and looks pretty good for a short. What I would use here, so when I look at this, I'm still looking at the trade. I haven't made it yet. So we're looking at this current price is 23.70. 24.42 is a 20-day moving average right now. I would put my stop just above there, maybe 24.50. That's what I'm going to watch for a stop. So 24.50, that's 80 cents away. Okay, so let's take a look at that. Also, I'd be looking at a target price down around the lows here, so about 21.80 I'd be looking at. So that's about $2 away. So a little more than 2 to 1 risk reward on this. So let's take a look at the options now. We got, I'm going to bring up the Tastyworks, trade, work. Okay, I already brought up the November options. You can see here that October options expire in 8 days. I don't want to trade those, it's too close to expiration. November's got 36 days left. Theta, the time decay, won't be kicking in too hard quite yet. The implied volatility is a little high at 64%. I'm not thrilled about that. However, I'm gonna make the trade anyway. So I'm gonna click the November options, bring that up. Here's our chain. Current price is 23.73. So we're gonna look. Let's just look at the 24 puts. Okay. By buying the 24 puts, we're looking for the price to decrease. We're looking for the price to drop, price of the stock to drop, which will make our puts become worth more. Okay, so we're looking at the 24 puts. Those are right about at the money, slightly in the money. The current bid is 205. The ask is 210. So we've got a nice tight market. The delta is 0.49. At the money options, we'll have a 50 delta, or 0.49, 0.5. What that means is for every $1 that work stock drops, so let's say it goes from 23.70 to 22.70, we can expect the price of the option to increase 50 cents, 49 cents. Okay, so quick, I just do the math in my head. Some of you might need a calculator, that's fine too, but when I'm looking at this, I'm going to calculate it real quickly. I'm looking at that. So a $1 drop in the stock would be 50 cents on a $2 option. That's roughly 25%. Also, so what I'm looking at now is, I said that the move to our stop level, if the trade goes against us and work stock increases, I had the stop at about 80 cents higher. So 80 cents, you take that 80 cent number, multiply it by the delta. So 0.8 times, or 80 cents times 0.5, we're looking at a 40 cent move in the options. It would move 40 cents against you. 40 cents divided by $2 is roughly 1/5 or 20%. So we got about a 20% risk on this option to our stop level. Meanwhile, we got about a 50 to 60% expected profit should the stock drop $2 that we expect. So I'm just going to go ahead and show you how I'd make the trade. Also, I'll just show you this is just an account that I use for doing these videos. You can see the net liquidity here is $10,000. So let's pretend that we got a $10,000 trading account. I might look to trade anywhere from 3 to 5%. So remember, we're saying the risk on this trade is roughly 20%. So if you made let's say a 5% trade on this, 5% of your 10,000, you're risking 20% of that 5%. So you're risking 1% of your portfolio. Okay, so what am I saying here? So we're saying if we did a 5% trade, 5% of 10,000, we're talking $500. And we can see the 24 puts are trading 210, roughly $2.10. So we might just want to buy 2 of those for this size account. We'd buy 2 that would add $2.10. That would be $4, or that would be $420 in premium that we'd pay to make this purchase. So we'd be looking at about 4% of our portfolio. And again, we were talking about a 0.2%, a 20% risk to our stop. So 20% of 4%, we're talking about 0.8% total portfolio risk on the trade. Okay, so we're going to buy 2. I'm going to put a price at 210. That's right in between the bid and the ask. And I'm going to click review and send, and send. And you can see it's working now. Our bid is showing up, 210 bid. Okay, the ask is now 215. The stock has dropped a few cents since we started chatting away here. Let's see, it should, if it ticks up another couple pennies here, I think we'll get filled. And there it goes. So 23.72, yep, traded up 3 cents, and we quickly got filled at 210. Okay, so you can see here, you can go X this out. You can look in here, we can see work. We own 2 November, 24 puts. Total trade price was $420. And that's about it for here. So that would be my thinking on this trade. I actually made the trade a little earlier this morning. It's up about 10 or 15% right now. But I wanted to shoot a video and just show you, walk you through what I see on the chart and what's happening. So we're doing it now. Anyways, that's about it. I hope you learned something. I'll try and do quite a few more of these, just walking you right through all the steps involved, and I think that'll make it a lot easier for any of you that are new to options, and just kind of getting a feel for what we're looking at and what we're expecting. Okay, so again, we're looking for work to decrease, drop down to about this level. We're looking at a move down to the lows. Okay, so about 21.43. It's a little over $2 lower. Meanwhile, I'm going to place my stop just above this falling 20-day moving average. Again, I should mention when I mention a stop in an option trade, I don't necessarily mean that we place a stop on the option itself. We actually need to go in and make the trade ourselves. So what I tend to do is I will go here, trading view, make an alert. I'll put it in here at 24.50, and I will make a mark here to exit puts. Create that. That way I'll get a nice alert if the price pops up and I'm not paying attention. Price pops up, it hits 24.50. I can take a quick look at the chart, decide, yep, okay, I want to be out of this. It's not working. And then I can quickly go in and exit the trade and the options. All right, I'm going to leave it at that. Thanks for watching, and we will talk to you later. Bye. Thanks for watching, and don't forget to subscribe.